This is Global Business Report. In major economic news today, the United States and India have announced a significant new trade agreement that could reshape their economic relationship and affect businesses and consumers on both sides. At the heart of the deal is a large reduction in tariff costs, the taxes that countries charge on goods coming from abroad. The United States has cut tariffs on many Indian products down to 18%, removing higher tariffs that reached as high as 50% in recent months. These steep tariffs had been a source of tension between the two countries and made Indian exports much more expensive when sold in the United States. By reducing tariff costs, the hope is that Indian goods will become more competitive and cheaper for U.S. buyers. In exchange for the tariff cut, Indian officials have signaled they will make big changes in how they buy energy, especially reducing or stopping purchases of Russian oil. U.S. leaders have said this change is part of the agreement and is linked to the new trade terms, though the exact timing and details of how this will happen are still being worked out. Another important part of the deal is that India will open up more of its market to American products, which means American goods like aircraft, machinery, technology items, and some agricultural products could become easier to sell in India over time. Officials from both countries have spoken positively about the deal, calling it a reset in trade relations and a step toward a stronger partnership. They say the agreement may eventually lead to even more trade and cooperation beyond just goods, potentially involving services and investment as well. Markets reacted quickly to the news. The Indian rupee strengthened, which means it became stronger against the US dollar. Indian stock markets also rose as investors welcomed the idea of increased exports and a clearer trade relationship between the two nations. Businesses that export products like textiles, jewelry, chemicals, and engineering goods are likely to benefit from lower tariffs. These sectors sell many products to the United States and now face fewer costs that were making their goods more expensive abroad. In simple terms, this deal is designed to make trade easier and cheaper between the United States and India. The hope is that by lowering barriers and opening new markets, both countries will see more jobs, more exports, and stronger economic growth. However, not everything is settled yet. Some leaders and economists point out that details still matter. The exact timing of India reducing Russian oil purchases, which products will benefit most from lower tariffs, and how fast some changes will happen are all still being discussed. Critics have also raised questions about sensitive areas like agriculture, where local farmers and producers may face new competition from imported American goods. Lawmakers in India have asked for more clarity on these points before fully approving all aspects of the agreement. Despite these uncertainties, the trade deal represents a major diplomatic and economic step. It signals a willingness by both countries to work together more closely, reduce trade barriers, and find common ground on economic policy after years of tension. If fully implemented, this deal could pave the way for more trade, more jobs, and deeper cooperation between the United States and India, two of the world's largest economies. That's the latest on the India-U.S. trade deal. Stay tuned for continuing coverage as details are finalized and the agreement moves forward.